The most important thing about any kind of trading content isn't what do we think is going to happen, what do we feel, thinkings and feelings. Right, not really the point of trading. What do we see and what are we going to do about it, right? What I see right now continues to be very much a window dressing type behavior. And when it comes to the S&P, the NASDAQ, the Dow, the Russell especially, I want to continue to be bullish. Probably least, though, the NASDAQ and mostly the Russell. So let's bring up this image. Now this is the current open trades that we have. Talk your book. What do you got? Not what you're feeling, not what you're thinking, not what you might do. What are you doing? Not right? That's why anyone's tuning in. Rog, what are you looking at and why? Take a look at the symbols in the open swing column. This is going to go out to my members today. All right. I don't have any new swing entries, although we are trying to get into a piece of the Russell, even KRE. So write that down. Look for some dips. We're long Wells Fargo. Why? When I show you the sectors, keep in mind financials, metals and mining, insurance, consumer discretionary, and energy. All right. Wells Fargo, obviously, as well as XLF, financials. Alcoa, metals and mining. LNC, insurance. Amazon, consumer discretionary. Walmart's my quirkiest trade here. Walmart is actually a fantastic relative outperformer, along with Costco, within the XLP, which is not a great sector right now. But Walmart, and then finally energy. Funny enough, it's energy that's probably giving me the most fits. We still have an open position here, but of all the trades on that list, these are all the alerts that have gone out in the Sector Secrets Mastery. Of all of them, only one remains at still a risk spot in the trade cycle, meaning if I get stopped out of XLE, it will be for a loss of a certain percentage of the value of the options that I bought. Everything else, Wells, Alcoa, Lincoln, financials, and Amazon, as well as Walmart, are at least break-even stops or better. So now we're trading with house money. And that's a huge shift in the life cycle of a trade. At what point are you skewing the risk-reward ratio in your favor? At what point are you thinking about account growth in your trading life cycle? All right, so let's do this. I mentioned that all the indices look great, none better than the Russell. So let's talk about this one because I would definitely put it on the radar. Put these on your radar, right? One, you want to buy a dip in the Russell. When that dip comes, you can buy a Russell, micro Russell, IWM calls, and I would also keep an eye on KRE, right? The regional bank ETF. And while we're on the topic of banks, I would also recommend not only is this sector, this XLF sector so great, really doubled up here. And I'm willing to get into more. There's always a fine line of buying a lot of the same stocks in a similar group. But once you've got your trades that are open currently, like the Wells Fargo trade we have on in the Sector Secrets Mastery, which at this point is a 5x trade. It's 5 times the initial premium that we paid for it, or XLF, which is attempting to punch up to new highs, and we've taken profits out of that, and we're going for that next target, the second target, the third target. Once we're in that position, it's cool to start looking for more entries. So JP Morgan, Visa, Bank of America, Wells Fargo. I would say of these, my favorites for 2 reasons. One, they're liquid and they're scalable, meaning the price of the option is account friendly for a large account, like mine, frankly, where I can buy 20, 30, 40 options if I want, and a smaller account could buy 2, 3, 4 options if they'd like. So I like that. And I would say largely that's going to be Bank of America, Wells Fargo, and Citi. Keep an eye on those 3 names. Those are my favorite. They're very any size account, frankly, nearly any size account friendly. All right, so this is going to be the real gist of the most important part of our conversation. And that is the sectors. This is so important, gang. If you're wondering, hey, how are we in right now? And these are the open trades right now. How are we in these winners, right? We're going to have, 8 8 open trades, 7 of 8 right now are winners. Why? Because we're following the nature of this time of year, which is window dressing. Strength gets stronger, weakness gets weaker. We're looking at the quarter to date strength. We're focusing on things like regional banks, airlines, financials, consumer discretionary, energy, insurance, communications, metals and mining, right? Focus there. They've already been strong. They have a good quarter. They're most likely, probability, right? Most likely to benefit from window dressing. Find the strong stocks in those sectors. So let me give you one example of finding strong stocks and sectors. And we're going to dive into a whole lot more of this in the premium video. So let's take a look at XLC. Just like I gave you a list for financials, here's the list for communications. Am I interested in Meta and Google? Not in the least, right? Don't get caught up in a symbol having a good day. You want symbols having good days, if not good weeks. Netflix, Disney, TMUS, Take-Two, EA, and Telephone. There's your list in one of the outperforming sectors. Stick to the long side, focus on the window dressing, find strength in strong sectors, onward and upward. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.